Good afternoon, everybody. In just a few moments, we're going to play a few clips from today's CNBC halftime report. Once the news is over, stay tuned because we're going to dive right into the charts and take a look at some of the technicals of the stocks that featured in today's halftime report. We're going to take a look at some of the key areas of support and resistance and provide an analysis to see if the technicals actually back up with what the CNBC guests are saying. Stay tuned.
Welcome to the Halftime Report. I'm John Ford, in for Scott Wapner. Front and center this hour, what's the market's next move in this record-setting rally? The Investment Committee is standing by with how they're positioned right now. And joining me for the hour, Jim Liebenthal, Kevin Simpson, and Steve Weiss. Let's get a quick check on the market. All the major averages are just fractionally lower right now, but near record highs. The Russell, you can consider that a major sometimes, sometimes not. It's also up fractionally this time, but it's been a heck of a week of data, guys. Jim, especially when I look at the retail sales data today, which came in a bit under. But after we had kind of an encouraging read on CPI, I wonder how all of that feeds through into how you position with your investments.
Yeah, so let's talk about that. But first, welcome, John.
Thank you.
I've been doing this now 13 years, and I think this is the first time we've had the opportunity.
Long-time viewer, first-time anchor.
Okay, well, it's good to have you. Welcome. So, interesting figures today on retail sales, and I think even though they disappointed, there's a very cogent explanation, which is online sales was the culprit as far as where the disappointment was. Amazon Prime Day was in June this year. It was in July last year. So that is probably the reason why there was probably some pull forward of online sales into June from July. Further buttressing that argument is Redbook sales, which measures in-store sales on a weekly basis, has been really quite strong for quite some time. So I'm not really worried about retail sales. The CPI, PPI figures, you put this all together, and what it says from a macro point of view to me is that the Fed doesn't have to go in September. Now, maybe they will. There's still a 30% chance as measured by the Fed funds futures market, but I think they're likely to wait. And I think we can all wait for that matter, because we've got Jackson Hole coming up. We've got another round of CPI, PPI. So it's too early to make the call. Nonetheless, I think they're going to wait.
Kevin?
Yeah, I think it's early enough to make the call, and I agree that there's very little chance that the Fed's going to be moving at all for the rest of the summer. And I think that the inflation data was really the catalyst for it. And I said last week that if there was no rate hike, that was almost like a rate cut by proxy. And I think the markets responded to that. So if we look at where we are today, we've got the equal weight making new highs, the S&P pushing up against new highs from the broader standpoint. Earnings have been completely off the chart. Inflation is working for us. So I think it's a good setup for the rest of the summer. I don't think the Fed's going to ruin the party, John.
Now, Steve, I watched enough halftime to know if anybody's going to disagree, it's going to be you. That's why I saved you for last. So what do you say on this? And I think my question is this showing any signs that that working class consumer might be ready to crack? And so do you have to be positioned for that?
Yeah, and I think that's the critical issue, which is that it's a bifurcated economy. It has been for a while. If you've been in the markets, you've created nice wealth for yourself. But the issue is that prices keep going up, and you've got inflation, and the CPI number really caught oil at its low and the PPI number. So we've since seen oil move higher. It's going to move higher still. And there's little we can do about it with our reserves at low levels, lowest levels in a long time. So that's how you got a position. Now, offsetting that, more than offsetting it, to Kevin's point, and I'm going to be in an agreeable mood today. The only thing I'm in a disagreeable mood with is that I've been doing the show with Jim for 13 years, and that's really set me off. But we'll leave that aside. But in terms of where we are, the economy's very strong. It's driven by AI, a lot of spending, not everything, and we haven't really seen that ebb at all. So everybody keeps calling for the end of the cycle in terms of the stock prices, but in terms of the spending, not everybody, very few. But I've actually called for the end of it in a couple of my position groups. But the spending will keep going, and that's going to keep driving the economy, and it bleeds out because it tightens things. So where it tightens it, for example, if you're an electrical contractor, you're driving, you're using your labor for the data centers and others to a disproportionate level. So what does that do? So it makes the others, that the smaller companies that maybe weren't doing so well, now they've got more business, the typical business. So it
Well,
really
how
is
long does that
spreading it
last,
out.
I guess, is the question. I see this in the beige books, and part of what they're saying in some of these districts is, hey, if you're not in the data center biz, it's actually slow. So when that slows down, is there this huge supply of contractors who then flood back into everything else? I don't know. Jim?
So, Bill, excuse me, Bill. I'm reading the teleprompter here, but Steve, the way you're setting it up.
13 years, huh?
Steve, the way you're setting it up leads to the question that the market has been facing, and you just asked it for the last month. We go back a month ago, right, and the semis were coming down, and a lot of the premise in the markets was, this is it. This is peak spending. This is as good as it's going to get. John, what we found out in the last month is a lot of the selling in the semis last month was deleveraging, whether it was Korea and the Kospi or situational awareness. And also, in addition, over the last 2 to 3 weeks, and this is buttressing what you're saying, Steve, is that all the hyperscalers have said not only are they maintaining capital expenditure plans, but they're increasing them, especially next year, which for the top 4 hyperscalers, they're going from $750 billion in capex this year to $1.2 billion next year. So, sometimes the narrative follows the market. Last month it was, okay, this is it, peak spending. Now we realize that it was deleveraging, and as the market goes higher, I think we're going to see more people get on the bandwagon that it's going to continue. The spending's going to continue.
So, Kevin,
but it's very important.
I want to get to Kevin on this one, because we're talking about hyperscalers. Okay. I know you've been holding Microsoft for a while. Does that get you in an accumulating mood with Microsoft, or are you just kind of holding pat and selling calls against it?
Yeah, I can be really specific with that, John, because after the sell-off in February, we saw Microsoft go from literally 550 to 350, and that became a buying opportunity. So in the 360s, 370s, we were able to accumulate shares, and that was the first time, probably in a good 5 or 6 years, where we've had room in my portfolio to add to Microsoft. But now we've seen the stock recover back up close to the 500 range. So I would say at this point, it's probably a hold more so than a buy. And to your point, wonderful opportunities to be writing options against Microsoft here.
Steve?
Yeah, look, I just want to emphasize, you got to distinguish between when the stocks have peaked on spending, like Micron and Broadcom, or when the spending has peaked. So the spending is going to continue. It doesn't have to go higher. All it's got to do is maintain the level it's in. And the first signs that hyperscalers, which we haven't seen, are cutting back on spending, well, that's going to be look out below. So I think you can continue to party on, but the market is just in a weird spot. You take a look at Broadcom. I mean, the stock was on a tear. I had tremendous regrets about exiting the position, but then look at it today, down for no reason. So the market is just somewhat irrational in terms of how it treats stocks, and we see that time and time again. So it's difficult to know where to go. But to Kevin's point, you've got to take the opportunity to buy these stocks when they get displaced. And we see it with Meta. We saw it with Microsoft. That's where you really make some good money. Keep your core positions, but take those, those situations where they're not really justified and trade.
Jim, you made some good money in Micron.
Yep.
We're talking about.
I'm flat on it, but I'm sorry. Keep going.
Oh, okay. You're flat on it now.
Yeah.
Okay. You did make some good money, and then easy come, easy go. But we had Sandisk on earlier. What would it take for you to get back in on that memory trade? Because part of the argument around Sandisk is, hey, it's not like it was in the past with the boom bust. Memory is the new compute. It's the new bottleneck, and so there's a longer runway here.
Well, John, just a little narrative here on me on Micron. I'm about 2 months into the trade. I just started it. I bought it a little high right after earnings, and then I added to it after it came down. That's why I'm flat on the average position. Okay. But I like it here, and I like the strength that we're seeing. And I do think that the weakness after earnings, which was really located in July, I already said this, but it bears repeating, was all the leverage in levered ETFs and margined accounts starting in Korea, where a month ago we saw 1.2 million accounts get margin called, 320,000 of which were involuntarily liquidated. Listen, the old adage on Wall Street is when the margin clerk calls you, he doesn't ask you if you want to work the order. He just sells your stock. And that's that's what was happening in July. It also flowed through, not just with the Korean memory names, but to Micron, and it was felt by situational awareness. We're downstream of that now. And while there is still this question of how long will AI spending go on, I've already said that based on what I'm seeing, I think it's going to continue for the foreseeable future. I'm comfortable being in Micron as it rebounds from that artificial depression that was caused by deleveraging last month.
Kevin, I think you saw some covered calls against Micron as well as Intel. Are you still in that kind of like it but stand pat phase versus what it would take to add?
No, I think you could add here to these memory names. You know, they're cyclical, and when we see a cyclical trade end, it generally ends badly, but I don't think we're anywhere near the end of this cycle. So when you look at the Sandisks or the Microns, having this pullback that we saw, whether it was for a deleverage in South Korea or was a deleverage here because of a hedge fund, those were opportunities to buy. And I still think these names are a lot cheaper today than they were a year ago. So I think you've got a year or two still before we're talking about the end of the cycle. But having said that, when you've got volatility, you've got a pop in Sandisk, a pop in Micron this week, harvesting that volatility and writing options against them. We've been really active this week, John, in call selling, and I think everybody can kind of follow us into that trade and take advantage of it.
Okay, well, we got a halftime committee member making moves right now. Bill Baruch joins us on the phone. Bill, you brought more Nvidia ahead of the print. You've also added to your Oracle position in this market right now. What's your thesis around AI infrastructure?
I mean, I think the AI build-out has its balance sheet. I mean, this $500 billion financing deal with Nvidia mitigates the bear case. Now, one reason here's three reasons why we're adding to Nvidia right now. One, it was 7.25% in our portfolio, and it trades about 7.75% to 8% in the S&P. We were underweight Nvidia, so we bumped it to 8.25%. The next thing, this thing trades at 20 times forward, earnings growth over 100%. The main bear case being mitigated, we think the fundamentals warrant significant multiple expansion. And then finally, the price action, you know, at the 200-day moving average, when the market had weakness through the end of July, and it's now rallying back towards these highs. I think they're in reach. The weekly looks great, and this stock typically can run up into its earnings report. So I expect it to break out, especially with the S&P breaking out to new highs. Oracle, now there is some technical resistance. It's trading to right here 155 to 165, but I'm excited about the NeoCloud story, and there really is no better NeoCloud than Oracle. They're premier cloud provider, trades at 18 times forward. I think some of the software headwinds, they're mitigated right now, and if AI succeeds, Oracle succeeds. So this is a name we want to increase in our portfolios.
There's some leverage issues here too. Steve Weiss, I wonder your take on this, because you were in Nvidia and then you were out. I don't know what your position is on it now, but I know you were hot recently on Meta, and Meta has become not exactly a NeoCloud play, but they've been talking about selling some of their capacity down the line. They've started playing in this open weights game, which is certainly very much related. What's your reaction to Bill's positioning and thesis here? What are you doing?
So on Meta first, so Meta, I've owned that for a long time, too many years to count, but I do trade around it in terms of adding to positions. I don't sell it, but I did add when it got down to 535. I didn't get it at the bottom. I didn't get it far from the bottom, and that's really quick recovery. In terms of Nvidia, I actually bought Nvidia last week, and the reason I bought it is because it was doing nothing. The semis were moving, it was lagging. I thought it'd be a big trade. I'm undecided if I'll be there for the quarter, because they always report great quarters. They always raise guidance. And guess what? The stock usually trades off because you pull forward that demand, to Bill's point, into the quarter. I'll probably stay with half the position in the quarter. I may stay with all of it. But right now, it's been a very good trade for me. I still have Taiwan Semi. It's still a major position, my largest position alongside Meta, actually. And look, all roads go back to Taiwan Semi. Nvidia has a great partnership. And one of the other reasons, this is kind of funny that I got back to Nvidia. There's a podcast called Acquired, which I'd recommend you listen to. And they did the Nvidia story with Jensen Huang from the beginning up to now. They also did Taiwan Semi. So when you really get to know Jensen Huang, not from what we've all seen on CNBC and at his meetings, but how he started and how he's such a gambler with such conviction, and he's always been right. So look, so I thought that inspired me to get back involved as well.
Conviction's a good word for him. I do know him a little bit off camera as well as on. Bill, last word to you on this one. How should we think about Nvidia from an investment perspective at this time? Is it like Apple in the smartphone sort of realm and age? Is it like Amazon in e-commerce? Do you hold on to it, or are there times when you just totally sell out? What do you do?
I mean, this has been a staple in the top 3 of our portfolios going all the way back to the end of 2022. And yeah, I think it's something you hold on to. The volatility in the name has been muted. I think it's ready to take that next leg. I think that this news on the $500 billion financing, I think Nvidia is the top beneficiary. And I think they're essentially sort of collateralizing their GPUs. I think this is great for the long-term story. And then I'm extremely bullish on compute. I know Steve has been trading Meta very sharply in the past few weeks. I think Meta is a terrific 2027 story on compute. I think that Oracle is something to capitalize on it. I personally trade the names like Nebius or CoreWeave. I think there's some really great tailwinds behind the compute story that are going to continue into year end.
Lots of money flowing into construction of data centers. Bill, thank you. Speaking of construction, Kevin, Caterpillar, it's part of this overall story as well. You buying it?
Yeah, we are, John. We're adding to Caterpillar here. I know Steve liquidated the position recently. There was a pullback. We're taking the pullback as an opportunity. This was a name similar to what we talked about with Microsoft a few minutes ago. We've owned it for well over a decade. Trimming into the massive strength as it traded very much in lockstep with the AI positioning. And then when the tech trade pulled back, we saw an opportunity here with Caterpillar. So again, the first time in a long time that we can add to it. This is an investment for us. I think it's cheap. They blew it out of the water this quarter. And when I say it's cheap, I put a little asterisk there because as a value investor, you look at that PE ratio and it's, you know, it takes a little bit to handle that. But I feel like this company is maturing to the point where it deserves a little higher valuation.
So no call rating on this. You're going to let it run at mid-20s, high-20s forward multiple? I'm just asking.
Yeah, no, I can be really clear on that. I think if we see a little bit of a pop on it, we will be writing calls against it because this isn't something where I'm expecting to see the name move up another 20, 30% from here in the short term. This is a long-term investment for us. I'd like to see a little volatility so we can get some premium out of it.
Tell me about, you know, I never talked about this with you, this covered call strategy, because it seems like it's kind of like, well, I expect this to run, but maybe not too fast, so I'm willing to take something out and put it, you know, cash in right now. But you're not necessarily writing calls against your entire position. So, you know, how do you think through how much you're going to write calls against something and when?
So thank you for that question. I'll go bring everyone to trade school here for a second.
Please.
Because we're very tactical on how we write calls, John. We don't sell covered calls on every position all the time. And really the way I answered Jim's question about how I feel about it has absolutely nothing to do with whether we cover the position or to how much we cover. So we look at the inherent volatility, the internal vol of every position, every single day on every stock. We'd love to write a covered call against every position, but you wait for some volatility. Sometimes it's around earnings, could be around a dividend, but not usually, or some type of news events. Some sectors have greater vol than others. So like technology is usually easy to write a call against. A traditional industrial like Caterpillar was usually a harder name, but over the past few years, it's traded a little bit, like I said, in lockstep, in parallel with the tech trade. So we've had opportunities there. But it's always a volatility spike that gives us the opportunity to harvest that premium. And that's something that we're waiting for with Caterpillar. When we see it, we'll write an option against it.
Weiss, I know that you don't like Caterpillar as much, at least I take it, based on your recent moves. But you're buying, what is it? What is it that he's buying? Leidos.
Yeah, Leidos. And you know, I did sell Caterpillar and Micron at, you know, to that point at much higher levels. So great company. I just thought it was overvalued. And would have a tough time holding that valuation. Leidos I had exited a while ago, and I sold it because of what the government was doing in terms of, they had a list of 10, and they went to these 10 companies, Booz Allen, them, and some large ones, and said, you got to give us something back on the contracts. So that put them under pressure. Then there are some other issues in terms of a recompete for the veterans, hospital, their technology there. But I entered into, I bought it, I'd like to tell you I bought it before the quarter, but I bought it on the quarter when they reported. It was a phenomenal quarter. I've always had the utmost respect for the management. Tom Bell, being the CEO of the company, done a phenomenal job. And when you take a look at this company, most people think it's just the airport detectors, the metal detectors. It is so much more. For example, their cyber business and acutely their red team cyber is $1 billion business. That's a big business, and it's growing phenomenally well. It sits on top of the LLMs. So it sits on top of a Mythos, sits on top of GPT-5, and it finds the vulnerabilities and it cures the vulnerabilities as it's doing it. So that's just one part of the company. The other parts of their business, this is really a technology company, are doing extraordinarily well. So I think the price is way undervalued, and I'm going to stick with this one. So it's a core position. It's a large position. I like it.
AI security, certainly a hot area. We got a news alert on Jeff Bezos. Let's get to Alex Sherman with those details.
Okay, so that was the first clip from CNBC halftime report. By my count, there were about 9 stocks there which featured within that report. They included Microsoft, Micron, Broadcom, Meta, Sandisk, Oracle, Taiwan Semi, Caterpillar, and Leidos. So we're going to start by looking at Microsoft first, and then we're going to do an in-depth analysis of each and every one of those stocks using the Ichimoku cloud system. So starting with Microsoft then, what we'll do is we'll start off by going through the Ichimoku indicators to those of you who are new to the channel or may have forgotten. So this here is the current Ichimoku cloud. We've also got the, let's move this here. This here is the future Ichimoku cloud. We've then got the blue line here. That's the Tenkan-sen line, and then beneath that, it's a bit hard to see on this graph, this chart, sorry, is the Kijun-sen line. Then we also have this lime green line back here, which is called the Chikou span line. And then these candles here are obviously the current price action. So using the Ichimoku cloud trading system then, what does that tell us about this current stock? So first of all, the fact that the stock price is trading beneath, so this is the current stock price here, it's trading beneath the Ichimoku cloud. That is all the hallmarks, bears all the hallmarks of a bearish stock. So that's the first red flag for this stock if you are a Microsoft bull. The next red flag for this stock is the future cloud. It is red, and it was trading in a horizontal pattern, but it is now recently started to move in a slight decline. The next point too that would flag is the stock price. It is trading beneath both the blue Tenkan-sen line and also the red Kijun-sen line as well. And the reason why that is important is because as it stands, there's actually no area of support for the stock. And by that we mean that should the stock continue to fall, there's no Tenkan-sen line or Kijun-sen line that could offer any area of support. Likewise, there is no Ichimoku cloud either that can act as an area of support. So if it falls, the stock could free fall. I don't think that's going to be the case because, as you can see, there is some consolidation here. So it does look like the stock has bottomed. You'll also note that the trajectory of the Ichimoku cloud as well is more of a sideways pattern, albeit we have seen a bit of a decline recently. Then lastly, the last sign of a bearish stock is the Chikou span line here, which is there, and it's trading just below the price action. Now, the fact that the price is the Chikou span line is trading beneath the price action is indicative of a bearish stock. So this has got all the hallmarks of a bearish stock. So if you're a bull, what would you want to see next? So ideally, you'd want starting with the pros, you see that the blue Tenkan-sen line is trading above the red Kijun-sen line. That is a massive plus. Because once that crossover happens, then it's unlikely it's very difficult for the stock to turn around and become bullish in the immediate. You also want to see the stock price action there test the bottom of the cloud, enter the cloud and start trading above the cloud. You'd also want to see the Tenkan-san and the Kijun-san start to rise as well. As you can see, at present and for quite some time, they've been trading in a sideways trajectory. We'd also wish to see the Ichimoku cloud here trading in an upward pattern. And lastly, we'd also expect to see the Chica span line here as well start to be trading above the historic price action, confirming the bullish nature of the stock. But as it stands, this is a this would be categorized as a bearish stock. Okay, so next up, we're going to take a look at Micron technology stocks. So this is a stock which has featured quite a lot this week purely because of the surge for memory stocks. So as you can see, this stock is very different to the one we've just analyzed, starting with the price action then. Zoom in there so you can see it a bit better. So starting with the price action, then you'll see that it's actually trading above the Ichimoku cloud. Now that's important because that is one of the hallmarks, one of the foundations of a bullish stock within the Ichimoku cloud system. So that's a tick in the plus side in the bull column. Next, you'll see that the current price action is just about trading above the blue Tenkan-sen line. You see here it was trading beneath the blue Tenkan-sen line, but here buyers have stepped in. It's now trading slightly above the blue Tenkan-sen line. It's also trading above the red Kijun-sen line as well. And that's important because both those blue Tenkan-sen lines and the red Kijun-sen lines act as an area of support for the stock should it start to trade downwards and the sellers take control. And the positive thing we like about this stock is the is the current Kumo cloud. The current Ichimoku cloud is green. It's moving in a slight upward trajectory. You'll also see that the future Ichimoku cloud as well is green, albeit it is trading in a sideward pattern. But one thing we do like about this particular future Ichimoku cloud is it's thick and it's green. The thicker the cloud, the better because it offers more support should the stock price action fall beneath the Tenkan-san and below the Kijun-san line. Lastly, we have the Chica span line, which is trading above the historic price action, and that confirms the bullish nature of the stock. One thing to watch out for, whilst this is a bullish stock, one thing to watch out for is you'll see that both the red Kijun-sen line and the blue Tenkan-sen line, as well as the future Ichimoku cloud, are all trading horizontally. So we may well start to see a bit of a pullback, especially from this rise that you've seen here in both the Tenkan-sen and the Kijun-sen. Next up, we're going to take a look at Broadcom stock. So this got hit hard today, Broadcom. It was down earlier by about 4 or 5 or 6%. But again, looking at the stock, firstly, current price action is trading significantly below the current Ichimoku cloud. So that's the first hallmark, first confirmation this is a bearish stock. You'll also see that the future Ichimoku cloud as well is red, and it's also trading in a downward trajectory as well. Not something we like to see. That's going to offer the stock no support whatsoever. You'll also see that the blue Tenkan-sen line is trading below the red Kijun-sen line. Now that type of setup there is one of the hallmarks of a bearish stock within the Ichimoku cloud system. And you'll see that there was a crossover here, 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 and here. It happens quite frequently within the stock over the past several sessions. But anyway, that type of setup between the two is one of the hallmarks of a bearish stock. Next up, you'll see that the price action is trading here beneath the Tenkan-san and the Kijun-san. And what that means is it means that the stock currently has no area of support at all, so it could continue to trade lower. That said, you see that it has just about bottomed out here at the bottom of the screen, and it does look like buyers have stepped back in recently. There's a few green candles that have stepped up as well. Chica span line is also trading significantly below the historic price action, and again that confirms the bearish nature of this stock. So I think that's probably about it for Broadcom. Next up is Meta. Let me just remove those previous training lines. So this is quite an interesting stock. You don't see this that often on this channel. So this stock, the price action here at present is trading inside the Ichimoku cloud itself. And that's interesting because once the stock is trading, if the stock was trading above the cloud here, we'd say it was a bullish stock. If it was trading below the cloud, we'd say it's a bearish stock. But once it's in the middle of the cloud, we say it's reached an equilibrium. It's neutral. It hasn't yet made up its mind which direction it's going to be traveling in. So you have to wait over the next couple of sessions to see what it does. There are a few indications as to what this stock might be doing in the near term, though. I'd perhaps describe this stock as a neutral to bullish perhaps, but it's difficult because firstly you've got the Tenkan-sen line here which is trading above the red Kijun-sen line here, and that again is one of the hallmarks of a bullish stock. We've also got the fact that the future Ichimoku cloud is not yet trading in a downward trajectory, albeit it is red, it's in a horizontal pattern. Another thing I like about this particular stock is that the Chico span line is actually trading above the historic action, and that almost confirms the bullish nature of the stock. We also have, it looks like the price action is trading above the red Kijun-sen line, so there may be an area of support here as well. One thing I'm not overly keen on about this stock is the trajectory here of the blue Tenkan-sen line is on a downwards trajectory, and there is a possibility that it could cross over the red Kijun-sen line should it continue. As explained, once that happens, then that is very detrimental to the stock, and it's indicative that the stock is about to turn into a bearish stock. One of the things I'm not overly keen on as well is how frequent there is a crossover between a Tenkan-sen and the Kijun-sen line. You see in the last several sessions there's been various crossovers, so again that's something to watch out for as well. Moving on then to Sandisk, which again featured on today's show. So this is one, this stock's received quite a lot of attention at the moment because it's in the memory sector. So again, looking at the current price action compared to the Ichimoku cloud, it's trading significantly above the cloud. Big distance between the two. So that again is one of the hallmarks of a bullish stock. We also have the fact that the future Ichimoku cloud, it's thick, it's green, and it's moving in a upward trajectory, which is what we like to see. You'll also note that the cloud, as it explained, is green, sorry, is thick as well, sorry. And what that means is that it offers a further level of support should the stock price pierce the blue Tenkan-sen and the Kijun-sen line, then a thick cloud offers far more support than a thin cloud. We also like the fact that this particular stock, you'll see that the Tenkan-sen line here and here and again here is almost being used as an area of support by the stock. Every time the sellers have stepped in, the stock price has almost ricocheted off the off the Tenkan-sen line, and it's found that area of support. Look at these small candles here, also confirming that position. Next up, we've got the fact that the Tenkan-sen is trading above the red Kijun-sen line. Again, that's one of the hallmarks of a bullish stock. Then lastly, we've also got the fact that the Chico span line is trading above the historic price action. Again, that confirms the bullish nature of the stock. One thing to watch out for, though, is that you see that the Kijun-sen line has started to trade sideways, as has the Tenkan-sen line to an extent. So we could see a pullback quite soon. Whether it may well be a healthy pullback rather than a complete reversal. Next up, very quickly, we're going to take a look at Oracle stock. Again, this is quite unique because you can observe that it's currently trading inside the Ichimoku cloud itself. It's not trading above or below it, and that confirms that this is a... Okay, let's move on to the next stock, which is Taiwan Semi. Again, first thing you notice about the cloud is about this particular chart is the proximity of the current price to the Ichimoku cloud itself. As you can see, it's trading within the cloud. And what that means again is that this stock has reached a equilibrium. It's neutral. It hasn't decided whether it's going to be a bullish stock or a bearish stock. On review though, we'd probably characterize this stock as neutral to bearish. So there's a number of concerns with this particular stock. So you'll see that historically the price was trading here above the Ichimoku cloud, above the Tenkan-sen line and the Kijun-sen line, and the historic price was trading above the previous price action. What's then happened? There's been a number of the sellers have stepped in. There's been a number of sales, as you can see, and we've seen that dreaded Tenkan-sen Kijun-sen crossover here, where the blue line has rolled over the red line. And ever since then, the stock price has continued to plummet. And rather than the stock use the outer edges of the Ichimoku cloud as an area of support, it's pierced the cloud and it's now trading inside the cloud. The concern for me here is that the red Kijun-sen line is still trading above, quite by some way, the blue Tenkan-sen line. And with that setup, it's incredibly difficult for the stock to turn around in the short term and become bullish until that's rectified. You'll also see that the future Ichimoku cloud as well, it's is quite thin. In fact, it's very thin. It's no longer it started to trade in a downward pattern and sideways slightly. We've also got the fact that the Chica span line is now trading below the historic price action. And again, all these are the hallmarks of a bearish stock. So again, whilst the price is technically inside the Ichimoku cloud, it has a number of the red flags, the Ichimoku indicators for a bearish stock. So again, that's something to watch out for in the short term. Next up is Caterpillar. So again, this is a bit similar. I think we've struck gold today because we've had a number of stocks where they've just entered the Ichimoku cloud. So again, as you can see, the price action is very recently entered the Ichimoku cloud. It's come from a bullish position where it was trading above the cloud. This is the Tenkan-sen line. It's crossed over the red Kijun-sen line. It's now trading here. And what's happened then is the stock's entered the cloud, and as it stands, I would categorize this stock as neutral to bearish. And the reason why we say that is because of that rollover of the blue Tenkan-sen over the red Kijun-sen line. The fact the price has recently entered the Ichimoku cloud, the fact that the only level of support next is the side of the Ichimoku cloud itself. You've got the future Ichimoku cloud. It's quite thin here, trading in a sideways pattern, sideways trajectory, and it looks as though Senko span A line here and Senko span B line are about to intercross. What happens when that occurs is that the future Ichimoku cloud here will start to turn red, which again is indicative of a bearish stock. Then lastly, we have the Chica span line here, trading below that historic price action, confirming the bearish nature of the stock. So again, whilst the price action is currently inside the Ichimoku cloud, we'd categorize this stock and it's currently set up as a bearish to neutral. If you are a bull on Caterpillar in the short term, what you'd ideally like to see is the buyers step back in and the current price action to move out of the cloud and start trading above the cloud. You'd also want to see this blue Tenkan-sen line to be trading above the red Kijun-sen line here. And ideally, you want the Ichimoku cloud to be trading in a upward trajectory as well. And then for confirmation of the bullish nature of the stock, you'd want to see this Chica span line here start to trade above the historic price action. Last but not least, we have Leidos Holding, which was a buy today by Steve Weiss. So again, you'll see that the current price action is trading significantly above the Ichimoku cloud. We've also got the fact, which is again one of the hallmarks of a bullish stock. You also note that the future Ichimoku cloud is green and thick, and it's moving in an upward trajectory. The Tenkan-sen line is trading above the Kijun-sen line, which again is indicative of a bullish stock. It's one of the hallmarks of a bullish stock within this Ichimoku setup. And again, the price action, it was trading above the Tenkan-sen line. It has, well, it's just breached it again. So we've got that area of support here. here, but also the future Ichimoku cloud as well, which is beginning to thicken. Then lastly, we've got the Chica span line, which is trading above that historic price action, confirming the bullish nature of the stock. So overall, then it's has all the hallmarks. It's a full house in terms of the Ichimoku indicators for Leidos holdings, at least in the short term, anyway. Okay, let's move on to the next clip.
All right, let's get some more moves from the investment committee. Steve, you just bought Valero, I believe, yes?
Yeah, it actually stocks them pretty well. So here's how it went. I like the refiner story. I've owned Valero in the past, but clearly, Joe Terranova has been very right on this. I think Jimmy's been involved in the refiners as well. And I called up Joe and I said, "What's your favorite here?" And he gave me two, and I picked up Valero. As I said, I've known it from the past. Had a quick refresher on it. And I just thought this is going to keep going. So you may see some volatility with oil prices, but oil prices aren't the story. It's refining capacity, and there just isn't enough. And the plant capacity coming on is going to take a while. So I think it'll continue to do well.
Jim, you agree?
I wildly agree. I mean, this is where the crack spreads, the basic gross margins in the refinery business are going through the roof. This is the pressure point in the energy sector. It's not crude oil. Now, Steve, I applaud you on Valero. I think you know that ExxonMobil is my poison of choice, if you will, because it not only has a very big refining operation, but it has the other operations as well, exploration and production, transportation and distribution. But in general, I do think people should be exposed to energy here. I'm twice the S&P 500 weighting. And this is not a call that oil is going to go to $100, nor a call that it's going to go to $60 a barrel, because in either case, companies like ExxonMobil have been excellent returners over the last 5 years. ExxonMobil in particular, twice the rate of the S&P 500 on an annualized basis. So I applaud you, Steve. And as I said, I think I like ExxonMobil. That's my favorite.
You care about the refiners?
I appreciate that, Jim. Thank you.
We own Chevron and Marathon Petroleum. I echo everything that Jim said.
Okay. Steve, tell me about CISCO. You also bought some of that?
Yeah, I bought CISCO after listening to all the analysts just whine about them missing margins by basically a basis point. The company put up a great quarter. They upgraded guidance. I don't know what more they want, but it just shows again how the market is just a strange place these days. So right now I'm down slightly on the trade. I haven't owned CISCO for a couple of decades. Jimmy's been a big fan of it, and it's done well recently, but it is trading right on a support line. So I can't tell you, I go into these trades and don't turn them into long-term holdings, but I'm going to give it a little time. I think it will bounce.
Jim, if I recall, you sold near the highs a couple months ago, and says trimmed, I should say, versus sold. Are you adding at these levels?
So I probably will, John. First off, both Steve and I are uncomfortable with the compliments that we're giving each other. So, Steve, we're going to stop it right here. But nonetheless, both he and I do agree on
facetious. I'm not being genuine.
Got it. I am being genuine, Steve. Nonetheless, CISCO, look, it was simply priced for perfection, and you got, as Steve was pointing out, these comments about the gross margins. They're investing in the business. Their top line is growing. The valuation is terrific. They're in the AI space. And this is a company that I've held since 2015. During that time frame, it has outperformed the S&P 500 nicely, but with a much lower beta than 1.0, which means I've gotten better than the market return with less than the market risk. And I think that's what's going to happen from here for long-term holders.
Okay, let's move on to Kevin, Goldman Sachs. I think you got a lot of financials, but you seem to like this one among the most.
I do like it the most.
Yeah.
And we added to Goldman this week, John. It was down about 10% in the month. And whether it was down because people were critical of the SpaceX IPO, which I thought was fantastic, they successfully brought the largest IPO to market. And then there was the obvious thing that maybe there would be no other IPOs, but I think Anthropic has put that sort of in the rearview mirror. This is a company that just earned almost $21 a share with 23.5 ROE. I love this name. They raised the dividend. A 10% pullback here was an opportunity for us to own it, and I think we'll own it for a long time.
Is it a K-shaped economy play?
Probably, but that's not why we bought it.
Okay.
Yeah, fair question.
All right. Well, let's get to a news update. Kate Rooney It's a little movie reference from the, yeah, Better Luck Tomorrow. Jim, you own Disney.
Very frustrating. Very frustrating stock. A couple of weeks ago, John, before the earnings, I was tempted to throw in the towel. I said that publicly on air, stuck with it. Stock has recovered a little bit from before earnings. It's up about 8%. I am sticking with it for now. And the simple reason is there are a lot of good businesses, plural, in Disney. There's obviously the theme parks. I think streaming is a good business. Now, you know, as Julia was just talking about, it's a question of how fast can it grow. And of course we want maximum growth, but we have to remember that this is taking over the baton from linear delivered television. And I think it's doing a good job. Just a year and a half ago was when it turned to profitability. The margins in the business are very good. And this is one of those cases, John, where I believe being patient as an investor pays off. But sometimes you can be patient for too long. You can be stubborn. I am really examining myself as to whether that is the case. I think we've got a winner here, but we've just got to stick with it.
Well, Cisco, Microsoft are dead money for a long time. I don't know if this is a case of that. Kevin, you don't seem to love Netflix, at least the last time I checked in. How are you feeling about it these days?
Well, let me pivot on that. First of all, he showed you a 20-year chart of Disney. How patient do you want to be?
Okay, well, I haven't been in it 20 years.
Fair enough.
And by the way, just backing this up a little bit, I mean, the multiple has come down from 5 years ago around 22 to now the forward multiple is 14. 2-ish% dividend yield that they keep raising. I mean, look, I'm getting paid to wait, and I think it's getting better. Hopefully, look, if I have to eat my words, I will do it here in public with our viewers.
Let's talk about valuations in Netflix. And I have become a big fan of it more recently, John, because what happened was you saw a 40x product come down to a 21 forward multiple on Netflix right now. So I'm very enthusiastic about it. They have a huge content problem, and I don't think that's the case with Disney. I think Disney has amazing properties. So Netflix is really going to have to invest in what they're doing. But if they can get this right, pricing, advertising, improve content, and maybe bring in some live programming, this is a cheap stock down here, and I think you can buy it at these levels.
I got to pay some bills right here, so we're going to take a break. Up next, Mike Santoli joins us
Okay, so that was the second clip there from CNBC. So we're going to analyze the stocks that featured in that segment, including Valerio, CISCO, let's move that, Goldman Sachs, and also Disney. Starting with Valero, which was a buy here for Steve Weiss. So again, as a refresher with the Ichimoku Cloud system, this here represents the Ichimoku Cloud. We then have the future Ichimoku Cloud here. We have this blue line here is called is known what's called the Tenkan-sen line, and then the red Kijun-sen line as well. We also have the Chikou span line as well back here, and then these candlesticks obviously represent the price action. Okay, so we're now going to analyze Valerio using the Ichimoku indicators. So first off, so you'll note the proximity of the current price action compared to the Ichimoku cloud. So the fact that the price action is trading above the cloud is one of the strongest indicators you can get that this is a bullish stock. Next up, you'll see that the blue Tenkan-sen line is trading above the red Kijun-sen line, and it has continued to do so for the last couple of sessions. It's quite a nice journey that it's followed. And again, the fact that the blue Tenkan-sen is above the red Kijun-sen is another hallmark of a bullish stock. We also like, whilst not an indicator, an Ichimoku indicator at least, we also like the fact that the blue Tenkan-sen line has quite clearly offered and is being used as an area of support for the stock. You see that the stock price is very closely followed in tandem with that blue Tenkan-sen line. We've also got the fact that the future Ichimoku cloud is thick and it's green, albeit it is now trading horizontal. It was trading in an upward pattern. And then lastly, you've got the fact that the Chikou span line here is trading above the historic price action. So overall then, this is a bullish stock. There are a couple of red flags as well, which I'm going to point out. So firstly, the obvious, you'll see that the current price action is pierced the blue Tenkan-sen line, and it's now trading, as of this juncture here, it's now trading below the blue Tenkan-sen line. What that means is it's lost that area of support. And so the next level of support will be the red Kijun-sen line. It does, however, look from this green candle here that it is making a play to try and reclaim that blue Tenkan-sen line. So the fact that it's fallen past the Tenkan-sen line is an area to a cause for concern, albeit only a slight one. The other thing about that as well is you'll see that it does appear to have consolidated here, so it may well challenge this area again. Price action, it was moving in an upward trajectory, is then collapsed, and now it looks to have consolidated. The other thing to watch out for as well is the fact that the Tenkan-sen and the Kijun-sen are both now trading in a horizontal pattern. They're no longer following that upward momentum. They've started to tail off. So again, that's something to watch out for as well. And as discussed, so is the future Ichimoku cloud. Okay, so next up, we're going to take a look at CISCO Systems. So this is quite an interesting stock because it reported earnings, I think it was yesterday or the day before. I don't think there was a lot wrong with the stock from what I recall with the earnings, but the street was not happy. In the event, using the Ichimoku cloud indicators, you'll see that the current price action is trading significantly below the current Ichimoku cloud, which is one of the hallmarks of a bearish stock. We've also got the point that the Tenkan-sen line, the blue Tenkan-sen line, is trading significantly below the red Kijun-sen line. And you'll see that ever since this crossover occurred here, actually up here, it's continued to here, the stock has been in a significant decline. You'll also observe as well the future Ichimoku cloud is red. It's trading in a downward trajectory. And lastly, the Chico span line is trading below the historic price action, and that confirms the bearish nature of this stock. So on a more positive note, however, you will see that the current price action is no longer in a downward trajectory. It looks to have bottomed out, and it's also taken control here of the blue Tenkan-sen line, so it's given it an area of support down here. So what to watch out for next is whether this stock price here can take over and challenge the red Kijun-sen line before making a play on the Ichimoku cloud itself to see if it can force its way through and start trading above the Ichimoku cloud. Once it does, then that will be confirmation of the bullish nature of this stock. Next up, very quickly then, because we've got only one more stock to go through, Goldman Sachs. So again, as you can quite clearly see, current price action is trading below the Ichimoku cloud. That confirms the bearish nature of this stock. You've also got the fact that the red Kijun-sen line is trading above the blue Tenkan-sen line as well. The future Ichimoku cloud is red and it's flat as well. It's trading in a horizontal pattern. And then lastly, we've got the Chico span line here. It's trading below that historic price action, confirming the bearish nature of this particular stock. Lastly is Disney, which looks like it is doing quite well. First off the bat, look at that chart. Look at the trajectory of this chart. Current price action trading above the Ichimoku cloud. Future Ichimoku cloud is green, it's thickening and it's moving in an upward pattern. Blue Tenkan-sen line is trading above the red Kijun-sen line, and quite clearly the stock price is using the Tenkan-sen line here as a level of support. And we've also got the fact that the Chico span line is trading above the historic price action. So they are all the hallmark indicators of a bullish stock within the Ichimoku cloud system. Okay, let's move on to the third and final.
Welcome back. Materials are the second best sector this month behind tech. And Kevin Simpson, you are leaning into that strength, buying CF Industries. What's your thought behind that?
Yeah, John, this is about as boring as you can get. This is a material.
You can't start like that. You got to make it exciting for us.
Well, sometimes boring is good. You know, this is a company, when we go back to the basics and we think about earnings, they just had a tremendous earnings report. Beat on the top line, beat on the bottom line. But nitrogen isn't something that you can just throw a plant up in a day or two or over a weekend. It's a multi-year project. And what I love about this company is that the cheap natural gas that we have here domestically gives them an advantage head and shoulders over their international competitors. This is also a stock from a valuation standpoint that trades at 11 times earnings. So when we're looking for companies that are increasing profits, increasing free cash flow, and having a multiple in the very, very low sub-teens, I feel really good about it. Modest dividend, but they did just increase it by 20%. So dividend growth, low multiple.
Jim, how are you thinking about these kinds of companies at a time when I don't remember one like it in recent decades? There's so much building going on for so many different reasons, and you've got this leverage picture in tech, which is an arena where you used to not see it, certainly not to this degree, and it's about building.
Yeah, well, and exactly. I think that trickles down. We've already seen it in the industrials. Obviously, you were talking about Caterpillar earlier, and I see it in my two materials companies, CRH, which is basically an aggregate/cement company. You know, all of these data centers that we're building, they need cement, they need the roads that go to them, and that plays right to CRH. And then I've got Cleveland Cliffs, which longtime viewers know has been a bit of an albatross. However, I do think
it's the Disney of steel, right?
Yeah. Maybe we'll play with that another time.
Okay.
But no, look, I think Cleveland Cliffs is coming out of the penalty box. And it's been in the penalty box for a long time because of an acquisition of a Canadian steel company just before tariffs got instituted. But if you look at the results, they are doing much better. And when a stock comes out of the penalty box, it takes a few quarters of results. And I think we're right in the middle of those few quarters of positive results whereby Cleveland Cliffs will really regain its footing. And if you want to make Steve really happy now,
always. Steve, I miss you.
Go to Steve.
These blocks, but I can't go.
Look at that smile.
I gotta. Yeah, I can't. Okay, let's go to Steve. I miss you, man. We keep going to these commercials.
Yeah, the only thing I would say is the CEO of Cleveland Cliffs has sold more stock than Jim has in the last few months. So he's a seller, Jim's a holder. So, you know, I got to bridge that somehow.
I'm guessing he's got a lot more of it than you do, though, Jim.
He does, but I'm just making Steve happy. I don't know why. I mean, you know,
he's got a nice shirt on. It's Friday.
Okay.
All right. Up next, the setup on some key retail reports coming our way next week. Halftime's back. Let's get a call on the retail sector. Dick's Sporting Goods named a top pick at Wells Fargo. Steve, it's been a top pick for you for a long time. Yes.
Yeah. So look, I think it's a category killer. I mean, there aren't many options, and families still want to go to Dick's for the experience, and they're changing their stores. So I think it's just a company that'll withstand economic cycles by and large, and a great retailer to be at, because you don't want to buy that stuff online for the most part. You want to go into the store, you want to go with your kids, and you want to buy them their gloves, their cleats, everything. So that's always going to be there.
All right. Also, a bunch of retailers reporting earnings next week. Kevin, Walmart not only is like the big kahuna, it's almost like an economic report.
Yeah, I like the way you phrased that, John. I think this is the most important report, even more so than retail sales that we got today. So I'm going to be listening for e-commerce. I'm going to be listening for their guides, and I want to make sure that they continue to serve the clients and the customer base, even as the consumer may slow down in the second half of the year.
And how much of the customer base is over 100K for sure. We got final trades coming up on Halftime. Let's get to final trades. Steve Weiss.
Yeah, first of all, thank you for noticing my shirt. Also have my wife's painting in the background, some Scott says too monotone last time. Look, I'm going with United Healthcare. The stock's come down a bit from recent highs for no reason whatsoever. As tech goes up, this tends to go down. I think that's a mistake. Very inexpensive here, and the turnaround is still well underway.
Shirt matches the painting. Quite nice. Kevin.
I'm going to go with Visa. They're bumping up against new highs, and we think they're the toll road for global commerce.
All right, and Jim?
Lockheed Martin, much like energy, which we were talking about earlier, there's been ups and downs all year, but the trend in aerospace and defense is higher. Lockheed Martin.
Lots of retail to trade next week. Thanks, guys. That does it for halftime. See you again, 3 Eastern on closing bell. The exchange starts now.
So that was the third and final clip from CNBC, and we're going to take a look at the stocks that feature, starting with CF Industries Holding. So very quickly then, as a reminder, this here of the Ichimoku Cloud indicators. This here is the Ichimoku Cloud, the current Ichimoku Cloud. We then have the future Ichimoku Cloud here. The blue line is known as the Tenkan-san line, and the red line here is the Kijun-san line. And then lastly, we've got this green line back here. It's a line line. It's called the lagging line or the Chico span line. And then we've got the candlesticks here, which represent the current price action. So starting then with the Ichimoku indicators, as always, the fact that the price action is trading above the Ichimoku Cloud is indicative of a bullish stock. And it's one of the hallmarks and one of the strongest indicators that the stock is a bullish stock. Next up is the fact that the blue Tenkan-san line here is trading above the red Kijun-san line. Again, that type of setup again is indicative of a bullish stock. Moving on to the future Ichimoku cloud here, it is green, which is a positive, and it's trading in a sideways trajectory. And then lastly, you've got the Chico span line here, which is trading above the historic price action. And that is almost a full house for Ichimoku, using the Ichimoku cloud setup. However, there are a few red flags with this particular stock, which I wanted to flag up. So the first is the obvious, is that it looks like the current price action has pierced the Tenkan-san line, and it's no longer using that Tenkan-san line as an area of support. So we're going to have to monitor over the next couple of sessions what whether the price action can challenges that Tenkan-sen line and can recover from it and start trading above the Tenkan-sen line, or whether it's going to start testing the parameters of the Kijun-sen line, and whether indeed that Kijun-sen line is going to hold the stock and support the stock. Another red flag with this particular stock is the future cloud. So whilst it's green, it's fairly flat, and also, more importantly, it's thin. We don't like thin clouds on this channel because a thin cloud doesn't offer the stock much support should the stock fall through the Ichimoku cloud setup. Another thing I don't particularly like about this particular stock is how often the blue Tenkan-sen line and the red Kijun-sen line interchange. You see over the last couple of sessions that there's been a number of crossovers and almost a crossover here as well. So again, when the blue Tenkan-sen line rolls over and crosses over the red Kijun-sen line, that is indicative of a bearish stock or the start of a bearish stock, and it's not something that you want. Next up is Cleveland Cliffs again, very quickly. So the stock price is currently trading beneath the Ichimoku cloud, indicative of a bearish stock. The future Ichimoku cloud is red, is in a downwards trajectory, again indicative of a bearish stock. The blue Tenkan-sen line is trading below the red Kijun-sen line. We've had the dreaded crossover here, again indicative of a bearish stock. And lastly, we've got the Chico span line or the lagging line trading below the historic price action, again indicative of or confirming actually the bearish nature of the stock. And then lastly, whilst not an indicator itself, there is no levels of support or no obvious levels of support beneath the current price action, meaning that the stock could go down further with very little support, although I would note that it does appear to have consolidated and possibly has reached a bottom, but we'll have to watch the next couple of trading sessions to see. Next up, Dick's Sporting Goods, again mentioned by Steve Weiss. So once again, price action below the Ichimoku cloud. Future Ichimoku cloud is red and in a downward trajectory. We have it looks like the blue Tenkan-sen line is above the red Kijun-sen line here, albeit only just, and then we have the Chico span line trading below that historic price action. So again, this is what I'd classed as a bearish to neutral stock, because I think what's going to happen is that we're going to see a reversal at some time in the near future. The reason why I say that is because I think the price action is about to test the outer parameters of that Ichimoku cloud. And as you can see, the blue Tenkan-sen line remains above the red Kijun-sen line. So it may well be that we have a reversal in the short term. Lastly is Walmart. So again, first thing you know is the trajectory of that Ichimoku cloud, as well as the location of the current price compared to the Ichimoku cloud. Again, the fact that it's above the current Ichimoku cloud is indicative of a bullish stock. Future Ichimoku cloud as well is big, it's thick, and it's green. It's not the Incredible Hulk, it's our future Ichimoku cloud. We've also got the Chico span line trading above the historic price action, confirming the bullish nature of this particular stock. So again, this is looking good, but it does report earnings next week. So be mindful. I'm always reluctant to purchase a stock the week before earnings. And also you'll note as well, it looks like the current price action has recently challenged the red Kijun-sen and blue Tenkan-sen line. So we'll have to watch out whether the buyers can reclaim those levels of support, or whether the stock price is going to now use the Ichimoku cloud as a level of support. So again, something to watch out for. Anyway, that's it from me for today. Tune in again on Monday for another video.